What's up, guys? It's Michael here. So the federal government decided to pause interest rates for the previous month based on their inflation report. So currently we're in June. Their inflation report come out is meant to be for May. Now, first, a lot of people, as I mentioned in a previous video, they were speculating that they were going to pause interest rates, and very few say they're going to raise interest rates. But honestly, if they raise interest rates, then everyone will be in a shock. And at the same time, everyone's expecting to pause because they think the economy can't handle it. And of course, the people are saying the interest rates are going to drop. That's most likely not going to happen. So based on this meeting, it's really interesting to see what type of questions that they ask. Like Wall Street Journal asked some pretty tough questions. You got other news organizations and agencies ask pretty tough questions too. But first, we're just going to break it down and keep this video really short. First, we're going to look at what they did. So first, they paused interest rates, and their statement was saying that what happens, the reason why they paused, because they wanted people to catch up what the interest rate is going, which I find it kind of ironic because their target is inflation, especially core PCE inflation, core personal consumer expenditures, meaning the main categories such as food, water, electricity. Basically, you look at the daily necessities versus everything else. So those apparently still going up in inflation. So basic value of it is still raising up in price, and the people who are selling those goods and services are making more money. But at the same time, people having problems with wage inflation. For example, the wages are going up, but their dollar in value is not matching what they're spending on. For example, food currently, if you think about it 10 years ago, it's about, like, you're looking about $5 to $10 cheaper on your average meal. So you're looking like below the $10 mark. And now it's over. Anything you go outside to buy food, for example, drinks, bubble tea, those are used to be, think about $1, $2. Now you're looking at 5, 6, 7, sometimes even 8. And that's where inflation kicks in. So they paused inflation because they stated that they're afraid that the economy going to go through a shock. As I mentioned in previous videos, all they have to do is increase production within those categories and sectors and provide bonuses and benefits and help those companies' businesses develop. But which they still haven't done, or will they ever do it? Who knows? Maybe the next presidency will be more competent, and just look at this point, most likely not. But besides the point. So first, they paused interest rates, and they stated that they're going to see 2 more increases this year. 2, not 4, my bad. 2 more increases this year. So expect to increase by another 50 basis points, so 0.5%. So in total, they say it's going to be 5.75% in total for interest rates. But which wasn't too confident, because the interesting, as I mentioned earlier, Wall Street Journal asked some pretty tough questions. He asked them, like, how is raising interest rates comparable to like creating a shock in the system? Like, why can they raise it all at once? And that was a really good question. Like, why didn't they raise again and again until, you get to their targeted goal? And of course, the answer that Jerome Powell give is pretty much vague, like every other SEC treasurer and speaker, especially who runs the financial institutions. He said they wants to give a shock to the system. But it's kind of ironic because the system is already in shock and inflation's going up. The only thing to do is raising interest rates instead of basically providing more production, because honestly, that would be another better solution, but apparently it's not on their table. And they're trying to say they're based on data by monthly. And based on their data on monthly, if you got to do it that way, here's another argument to that. If you look at the previous months, it's not working. It's personally not really working. Yeah, it went down, but it's not going down enough. And if you look at sector, on all the sectors, that's only data that's been provided. What happened to the data or like census that people did not provide data for? So it's only so much data they can get. So, I mean, it is what it is, but they expect the interest rates to go up by another 50 basis points, so 0.5%, 5.75%. I wouldn't be surprised because Jerome Powell wasn't too confident, which makes sense because it's pretty tough when you have a whole entire crowd of news reporters going after you, especially a lot of Americans' money is on the line right here. So in this case, I won't be surprised it goes over 5.75% in interest rate, but he gave out a chart, which this one, when he gave it out, okay, so as you see back in 2008 when the housing crisis, they raised interest rates and they lowered, but it doesn't drop instantly. It goes slowly, steadily. So he shows by the end of 2023, it's going to be around 5.75%, and it ranging around, going around to 6%. So he gives like a little bracket, a little leverage for himself. And by 2024, that's when he shows he's like, maybe at this year inflation, and consider they can get under control, they're going to start dropping it. So you see, look at it as dropping around the 5% to the 4% mark, maybe the 3% mark, because give or take. which makes sense. When a time you will have a pause, and after the pause cycle, usually that's when the recession kicks in, or big people are sitting around and waiting to see what happens in the market. And they're saying about 2025, it's going to go down even more between the 4 to 3% mark. And hopefully, and of course, by 2025, who knows what will happen. And after 2025, they put a later on date, and then maybe, hopefully, to get around the 3 to 2% mark. But that's what graph they showed, which is kind of ironic because right now, the inflation is not looking too good because their goal is to target a core PCE for inflation, and not just the overall inflation, because there's so many categories. Inflation, you have multiple categories, and right now they're looking for the ones that really target the average American citizen like us. And of course, like you guys are viewers, which you guys should click the subscribe button down below. So hopefully inflation goes down, and hey, who knows? If the economy crashes, this is the time we make big money, just like 2008. But that's besides the point. So the key takeaway is whether or not they're going to go over 50 basis points, because they said they're going to raise interest rates 2 more times this year. And currently, they finally paused. Now, first, we got to take a look at the next couple of months, see how they're going to do, whether it's going to give. But so we know by what they say, by 2023, they're not going to drop interest rates. These are going to be pause or raise. So let's see what happens. But personally, they're not really solving the problem. They're just going by month basis, but they forgot to look all the data behind. The data behind already shows what's going on, and what they're doing right now is not really working that great. But of course, since the higher ups, they refuse to change it, unfortunately. And like what Wall Street Journal said, why you just raise interest rates all the way you hit your target goal? Just continue to raise every month until you hit it. And of course, Jerome Powell couldn't answer. He said, oh, it's going to hurt the small businesses. Like, my guy, you're already killing them already. You're raising interest rates and killing them. If you don't raise the interest rate, you're still killing them. Meaning is inflation will go up and you still get screwed. So this is what I mentioned before. They have to increase productivity. And what they're doing right now is not officially working. And it's been showing for the previous months. So I hope you guys enjoy this video. Have a good day. And I'll see you guys next time. Peace.